what are other traders doing in the market and how are they positioned with their bias or with their set of belief systems or with their set of processes in the market. So that is always the other part, and we call this other part the inventory or the participation of other traders in the market. Right now, all of this is not just a random bias in the market. It's money backed positions. That means, okay, these traders, okay, have packed, okay, money into their strategy, have packed money into their process, and they have built a position which is, of course, okay, to run into a profit later on. But understanding where they are and how they are placed is a part of the process, okay, which we follow and which we believe in at VTrender, right? So today's session is we've spoken about market profile and order flow, which was all about our approach to markets. Today's session, okay, we want to focus on understanding what the rest of the market is doing, right? And the first thing which we do when we look at what other traders are doing in the market is we understand it, okay, by way of something which we call the spectrum chart. Now, what is the spectrum? The spectrum, okay, you will find from your menu. If you go down, okay, scroll down, market profile, order flow, options table, Greeks table, index table, you'll come to number 7 on that list, okay, which is the spectrum. And we have, okay, different spectrums for Nifty, Bank Nifty, Fin Nifty, and Mid Cap Nifty. Now, what we are doing via the spectrum is we are focusing on the short-term movement of the market. So that's the movement of the market from one weekly expiry to the next weekly expiry. And what we are trying to do is we are trying to anticipate, based on the existing positions of the market, where the market could possibly go to in the next 5 days. Now, this is not okay for the next 1 month, which is the monthly series, okay, which most people also trade today. But predominantly, the money is now more in the weekly series, the front week series, the series, okay, which is expiring. And you can do that. You can have a look at that by looking at the options table and focusing on any one strike, okay, over here. So let's say, okay, we go in, okay, with today was a buy side dominated day. So first day of the week. So you even look at the 21,900. It was about 71,000 contracts up today on the weekly. But if you look at the monthly, the same 21,900 is got about 15,000 contracts up today, right? So this is the monthly series, which is the 25th of Jan. And I'm going back, okay, to the 18th of Jan, which is the next weekly series, 6 days from now. So that's about up 71,000 contracts, right? So what does that tell you? That tells you that traders today are focusing more on the current week than the week, okay, which is to come, or the monthly settlement. And we have to use this data and understand what kind of positioning is happening, right? So this is 21,900, 70,000 contracts came today. But what about the rest of the strikes? What about the rest of the places where the calls and the puts are traded? How are traders anticipating that move to be? So we came up with what we call, first of all, let me just take out the rest of the elements on this chart, and I'll just talk to you in brief about what this is. So we came up, okay, with this study where we plotted a high and a low, okay, and we call this gamma wall high and gamma wall low. Now, what is this gamma wall high and gamma wall low? It's also a range of the market, okay, for the expected week. Okay, now to understand gamma, you'll have to, okay, look up and Google gamma second order Greek. Okay, so all the delta, gamma, theta, rho, and all that things, okay, if you can just Google it, okay, you'll get a very good understanding, okay, about what I am talking about. Since, okay, I've got a lot of ground to cover, I'm not going to go into the basics of gamma, but we've got some videos on YouTube as well. But your best friend for understanding gamma is still Google. And if you Google that term, gamma in options, you will get a very good idea about what gamma can do in the markets, right? But we use this data from the gamma of options, and we've arrived at a range for the coming series. So this range right now is 22,100 to about 21,700. So the first question you have to ask, right, okay, it is 500 400 point range. Okay, what does it make, what does it mean? Okay, and how am I going to find it useful, right? So what really happens on the first day of the week, traders position themselves, okay, for an expected movement through the week. So if you go back and look at last weekly series, that was on the 5th of Jan, we began that Friday session. This was the level that they had in mind, which was roughly around that 21,900 level, and the lower level, okay, they positioned themselves was about 21,500. Right? And if you look at the activity from last Friday to yesterday's settlement, it was confined. This is actually the price bars, okay, can show you, but you can go back to your charts, okay, and you can have a look at it. Most of the activity was confined within that 21,900 and 21,500. Now, this does not mean that everything, okay, was 100% confirmed within that. As the market ebbs and flows, as it moves up and down, okay, you will see, okay, that there are some changes happening, right? So it went lower, they booked profit on the higher strikes, they came lower, then okay, they thought, okay, there was a little bit of risk, they went higher, they came lower over here, okay, all the time. Okay, at one point of time, okay, they even thought, okay, that 21,500 was going to be broken, and they went, okay, slightly lower to 21,400, okay, for one day, which was yesterday. This is just, okay, risk management, okay, which happens. But broadly speaking, the consensus, okay, which is established on a Friday, is to be monitored through Monday, Tuesday, Wednesday, and the last day of the week. The last day of the week, okay, this is not really that important, but most traders would pick up positions for the coming settlement based on, okay, their planning and their preparation on the first day of the week. So all these people, okay, who added that open interest, like I showed you on that 21,900 PE, and they're carrying home that position, they have a plan in mind, and the planning is actually anticipating 22,100 on the higher side and 21,700 on the lower side. So this is the first thing, okay, we pick up, okay, from a spectrum chart. Now, mind you, these are Nifty spot levels. So we're not talking about futures over here. We're talking about the price out of the Nifty spot index. So we're looking at Nifty over here, which is the spot. So when I say 22,100, I'm referring to the 22,100 spot. So what else, okay, do I have over here? So I have the futures premium added, which goes up and down. So today, okay, on that gap up, okay, we had that big dip. We were speaking extensively about it, about how it suddenly, okay, dropped down to about 40. And you can, okay, keep an eye out on this premium as the day goes on. And you have something, okay, which we call the gamma zero. This is that dotted line of the spectrum chart. Now, this is actual hero of this chart, right? The gamma 011, we've computed, okay, this number, okay, through a set of calculations, all based on the existing position of traders in the market. But fairly, to put it very simple, in simple terms, the market is said to be positive when it is above the gamma zero line. Like today, the gamma zero was 21,800, and the market stayed about 21,800. So you can adopt a positive bias. If it dips strongly below the gamma zero, you can expect, okay, some selling. Or if it stays closer to the gamma zero, okay, like all of yesterday, you can see, okay, that the market is flat or is gonna be range bound or at a particular place, right? But if it's decisively above a gamma zero line, then you can adopt a positive bias for the entire day. Best example, okay, I can point out to you is today. And whenever the market decisively breaks down and gamma zero stays up, that means, okay, that market, okay, is going to be short term going down, right? Now, this does not mean that the gamma zero is a default line on the chart and it's going to be there. The gamma zero has got a life of its own, And remember, it is about traders who have built positions in the market. So the gamma 0 is gonna keep moving. So today it was stable at 21,800, but it can go down to 21,900. It can go down to 22,100. It can go down to 21,700. But most of the time, 95% of the time, it's gonna be within this range, right? But there is a condition over here, okay, which we call a sniper, SNIPER, wherein if this gamma 0 meets an extreme like this gamma wall high, the blue line over here, we can adopt a short position in the market. If this gamma 0 meets the lower line, which is the 21,700 in this case, we can adopt a long position in the market. Again, that same chain of thought, that the market is positive above gamma 0 and negative below gamma 0. Okay, so if it goes above 22,100, we know that the MVIS line is not moving up. Okay, if it moves up, okay, we'll have to, okay, of course, take the stop and move out. But 8 out of 10 cases, we would be short in the market that day, right? So that is just one condition of the gamma 0. It can touch either one of these gamma wall highs and the gamma wall lows, and that would create another condition for the market. But to put it simply, okay, a market above gamma 0 is a market which is positive and moving up, and a market below gamma 0 is a market which is negative and moving down, and a market at gamma 0 is a market which is flat, right? Now, this is actually a view over 5 sessions, which is that current week. But what do you do as an intraday trader? How do you know that the market is adjusting inventory as an intraday trader? So for that, you get into the picture something called a market visualization high, which is here as MVIS high, and a market visualization low, which is the MVIS low, which is these yellow. So on your screen right now, we introduced 2 other elements which are about the market inventory adjusting itself intraday. So there is still a view that the range of the market is going to be 22,100 to 21,700, but traders are expecting a short-term 100-point upside in the Nifty, which may or may not sustain, but they don't want to take a chance. So what do? They either adjust or close some of their existing positions or build another hedge for it. Now, what do I mean by that? Okay, so suppose okay, a trader has, or rather an institution has got a 21,800 CEPE short. Okay, so he sold a straddle 21,800 CE and he sold a straddle 21,800 PE, right? The market opens at 9:30, 9:45, something changes in the market. The order flow suddenly finds another institution who's buying heavily, or something else happens, and our institution who's got that straddle suddenly starts feeling, okay, that, oh, my 21,800 CEPE is not really a good trade for the next 1 hour because the market has got a chance to run up to about 21,950, right? So what does he do? Okay, so he may not break that 21,800 CEPE. He will add an extra measure to the 21,800 PE to protect himself from upsides, or he will introduce a 21,850 call long. Okay, so that, okay, the damage, okay, from the up move in 21,800 CE is minimized or managed, right? So it is just option adjustments which can happen. This is something, okay, which we track via these yellow lines over here. So we say when let me just go to a 1-day chart, so we'll have a better understanding of this yellow. So right now, right at the open today, whenever this yellow moves up, in this case, okay, this MVIS high I'm talking about, this yellow, it's moved up. We can see, okay, that it is money adjusting positions, and you get a confirmation of this via your order flow chart also. The order flow, okay, will show your initiative buyers and initiative sellers. What actually it is actually, okay, all that information coming up and showing itself up in another screen. But whenever the market is adjusting inventory or big players are adjusting, this yellow, okay, would move up. Okay, and that is a trader, okay, who's adjusted position. If it goes flat again, yes, okay, the market is flat. But anytime, okay, they feel, okay, that there is an upward move coming, it can move up to this line also, right? A big change in the market behavior, would also mean that this blue line, okay, would adjust itself, right? So this is again based on the positioning of the market. It's currently at 22,100, but for some reason all traders think, okay, now, okay, the range of the market has increased, it can go to 22,300. So you will find this, okay, at 22,300. But what we are doing, why a spectrum chart, is we are trying to understand where the market can possibly go to, and we are trying to find a direction for ourselves on this chart. So this one chart is enough for us, okay, to understand what the market is doing at every point in time. Okay, again, okay, it's not like throwing darts on an empty wall, you know. This is all scientific data, this is a process data, this is data, okay, which is vetted and which is understood and which has been scrutinized and known, okay, to work in a certain way. Again, we are not claiming that we know all the sides to the jigsaw puzzle, but we know enough, okay, to know, okay, what we do not know, and we're using, okay, what we know and the evidence of what we know to form a better understanding of what the market can do, right? So this is the spectrum. So you'll broadly, okay, talk about the spectrum as having a gamma wall high and a gamma wall low, which are these lines. So you'll form a range for the coming week. Okay, based on this range, okay, you will then plot the gamma zero line, which is clicking on this blue dotted, and you look to see if this market is above the gamma zero or below the gamma zero. Now understand, okay, the rule, okay, the market above gamma zero is a market, okay, which is dominated by buyers, and the market below gamma zero is a market dominated by sellers. If you're an intraday trader, you will add the MVIS high and the MVIS low by clicking any of these buttons over here. These, okay, you can click on and off. So you add this, okay, to your chart, you'll be getting a yellow reference line on your screen, and this yellow line, okay, you look at these things, okay, sloping up or down, will tell you, okay, whether the market is adjusting inventory or not. One word to describe spectrum is it's about inventory. It's not about the buying, and it's not about a line on a price chart. Now, good, I remembered that because I have to clarify a very important thing over here. A lot of traders, especially a lot of newbie traders, when they look at a price chart and they see lines drawn on a chart, the first level of thinking, okay, they have is that this is a line drawn above price is a resistance, and a line drawn below price is a support, right? So we have to walk away from that line of thinking when it comes to looking at the entire market picture. Okay, the market on the whole knows no support, knows no resistance. Everything is demand and supply, right? So there's nothing called even a 21,820F level. As good as a supply it was, I knew, okay, one day it could be broken, and it got broken, okay, today. We were, okay, working on that for about 2 weeks, and it had to be broken because there's nothing called a finite resistance in the market. If the demand, okay, suddenly, okay, shoots up, then all the resistances can be blown out. Same thing, okay, with the market at 20,000, it can go 10%, 20%, maybe, who knows, okay, it can make, okay, 2 big gap downs, okay, on an unforeseen event also. It could be 40% down in the next 1 week also if some bad thing happens, right? So there's nothing, okay, called a completely believable support. There's nothing called a completely believable resistance. It's all demand and supply. So when we're asking you to look at the spectrum, we're asking you to walk away from that thought, which is this is a resistance and this is a support. It's not like that. It's just the positioning of the market. The current positioning of the market is projecting this as a range, and that is the range, okay, which we need to track forward to, right? So that is the spectrum